The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. Thank you for joining us today and welcome to this webinar, Driving Digital Transformation Through Business Process Automation. I'm really excited to host this webinar where you're going to hear from Craig Le Clair, Vice President and Principal Analyst at Forrester Research. He's going to bring his perspectives on this topic. We also have Ashish Deshmukh, Head of Banking and Financial Services, Newgen Software Inc. And for myself, my name is Roger, and in my role as a General Manager of FinTech Solutions at Celero, I'm responsible to bring in the innovative financial solutions and services to the credit union ecosystem in Canada. So globally, all industry verticals are in a transformation state, both on business and digital adoption side. As we move from a product-centric economy to more of a customer-centric digital economy, the business success these days is attributed to the ability of business to deliver consumer expectations around experience, accessibility, financial inclusion, and speed of service. I mean, this is where business process automation becomes an unavoidable component of any organization's digital transformation journey. In my opinion, today, process automation technologies, in combination with artificial intelligence, robotics, and cognitive computing, is really helping organizations to operate in a lean fashion. At the same time, they have this unique ability to deliver user experience. Can we go to the next slide, please? So from Celero's perspective, we unveiled our member experience-centric digital ecosystem vision last year. And one key component there was this notion of digital process and content management. And why we called it digital process and content management is we wanted to bring to the credit unions the notion of process automation. So traditionally, enterprise content management, in our opinion, was a good facilitator for documents and records management. But in the newer world of thinking and the process automation world, you need a combination of enterprise content management, business process management, case management, robotic process automation, and customer communication management to really get that digital transformation, member experience, and operational efficiency goals of institutions. Next slide, please. So our viewpoint is to come up with an offering that's got all the four components of a successful digital transformation and business process automation journey. It includes enterprise content management, business process management, case management, robotic process automation, and a timely customer communication management that's more oriented towards the process automation than the traditional customer relationship management. Next slide, please. And we came up with 3 service offerings. At the end of the day, we believe would help credit unions, or we can help the credit unions to transform from a traditional manual business process land to a completely automated business process world. And one of the key components there I have to stress is, we get a lot of questions about, am I ready for this? Can you help us with this transformation journey? So it's very important that organizations really understand where they are today and have a great roadmap put together, with things like process re-engineering before they embark on a complete transformation journey. Because the last thing you may want to do is take a very bad manual process and make it digitally beautiful, but still a bad process. So on top of that, when we went on to a partnership building exercise with Newgen Software, we really liked the approach of business solution accelerators. We have found that the business solution accelerator is a great way for financial institutions to achieve their business process transformation goals. And the third piece of our service is in a traditional sense, helping credit unions and financial institutions with building, custom solutions and configuration so that can accelerate the transformation journey. So these are the three pieces of service and solution that we have in combination with Newgen Software offering to our credit unions in their transformation journey. That was an introduction from our part, but I'm pretty sure that you're all eagerly waiting to hear from Craig. So without further ado, I'm passing over the presentation to Craig to bring his insights on the topic. Craig?
Thank you very much. It's great to have such an audience to talk about this information for. I just want to see and just check and see if you can see my screen.
Yes.
I'll take that as a yes. Okay, great. Yeah, and this is a bit of just a setup slide that really builds on what you just heard. That we've gone through a transformation. Now, in that 2010 timeframe, 2008 and 9, we were consumed with the financial crisis. So people weren't focused on some very important things that happened. One was the iPhone was introduced in 2008. You had Facebook introduced around that same time. So it was the beginning of this sort of transfer of informational power from institutions to customers, to people. They had more, as they developed, more information access in their pocket, and companies are no longer able to control the customer experience. Now customers wanted a much stronger customer experience, and they were going to vote with their feet if they didn't get it. So this led to a discussion of digital disruption, as we saw new companies with a fully digital model come in and take market share away from traditional companies by doing things in a completely different way that were really leveraging mobility and social as well. So this is what created this imperative to move to better customer experiences. And what we're seeing now, there's a bit of a shift in that conversation. It's still the age of the customer. It's still customers are at the center of all that we do from a business standpoint, but the support for customers, it's not about building mobile apps as much as it's about automation. It's about how do you automate your internal processes in a way that can facilitate social and mobile and a much better customer experience. If you look at it when we rate the companies like Target and all over the world on how strong their customer experience is, how omni-channel is it, how consistent across channels, for example. And very simply, all of this discussion about customer experience really leads to higher revenue for those companies that are leaders, as you see on the left. So this is a simple comparison of the market performance for public companies that we rated in terms of their customer experience, and you can really clearly see that those that had poor customer experiences were also laggards economically. So the bottom line is all of this discussion of customer experience really translates very, very tangibly to your balance sheet. This is a slide that really talks to the disruption, that pressure that we're still feeling. In the old days, think Boeing aircraft in the 1970s or the IBM mainframe in the 1960s. You had a small number of innovators, very smart, and they could come up with an idea or an approach or a vision, and they needed massive amounts of dollars. So in those examples, IBM had to spend 25% of their capital on introduction of the mainframe. Boeing, for the first commercial jet, a similar amount of money. But today on the right, we're graduating from, our great schools and universities all over the world, digitally trained and affluent, I mean that affluent in a digital sense, graduates that are can't wait to come out and disrupt the businesses out there, right? So there are many, many more innovators than there ever were before, and they don't need a lot of money. You can start in many, many examples, you can start, companies leveraging social media and mobility and new digital platforms at a fraction of the cost of the old days. So power is increasing everywhere. So basically, a risk for credit unions being no different than other financial institutions, maybe from a capital structure standpoint and an origin standpoint, but it's new forms of disruption like these companies here. These are segments that have a lot of fintech components to them, whether it's digital money managers that are managing assets in a portfolio with AI and robotics, comparison engines that are drawing traditional insurance customers to the web and driving them directly to carriers without any intermediary agents, whether it's digital, point to person-to-person currency exchanges and so forth. There's lots of disruptors, and I'm not even going to talk about blockchain here. So, basically, for credit unions, for financial services, it's very, very important to be aware of a path like this to digitization. So you say, well, how do I do that? Well, you have to think from the outside in. Point one, you think about the customer experience when you're redefining your systems. There's a lot of emphasis today on customer journey mapping as a methodology, which is a way to look at the specifics of how a customer is interacting with your organization and design from that perspective. You have to use analytics, number two, to drive insights. It's becoming very much a data-in world, and leveraging, collecting all the data from the customers, independent of what channel they're in, pulling it into a pool, being able to apply analytics, try to figure out what they're trying to accomplish. It's very, very important, being able to personalize that, having, predictive models that can, can provide guidance and advice on what to do with that customer. Moving to more agile systems, getting rid of this sort of silo orientation. All of these things these are the things when we survey companies that are advanced in their digital transformation, these are the high level things that they're doing. But let's talk about it at another level of detail, because the worst thing for a credit union, and I don't care whether you're one of the Navy credit union and you're huge, whether you're up in Massachusetts with digital credit union, where a lot of people worked for DEC years ago, are still very much loyal to that institution. When you drop into a 1980s process and interacting with your credit union, it's not good. If it's you're doing something and you've got to fax documents in, where you don't have some of the components on this slide, if you don't have electronic signature to be able to complete a transaction, so you have to go to the wet signature and paper process. If you don't have a BPM, you see it over there to the right in the middle part of this graph, to orchestrate the customer engagement in a way that allows it to appear more seamless across the different operational and functional areas in the credit union. If you don't have electronic forms, if you don't have the ability to absorb content and data about the customer and pull it into a document and generate it at the point of service, that's customer communications management, CCM. These are all enabling technologies to help you move from paper and analog processes to the digital world. And the good news, if you look at this chart, you see that the bulk of them are in this more mature state, and that's growth and equilibrium. That means that they've been around for a while, they're mature, they're not, there's nothing about artificial intelligence on here. This is all stuff that's deployable today, has a long history of success. But these are kind of the elements that you need to really reform that 1980s process. Now, when you look at digital process automation, which I'll talk about and define more crisply, but they're basically what we're including in digital process automation now are BPM, which we saw on the last slide, and case management. So case management is a it differs from BPM in that it allows you to handle less structured processes. So BPM is more where you have a more structured process, like say invoice processing, where you know exactly what the steps are. You can articulate in the process map every variation in the process. That's the typical BPM scenario. But case management is, you are driven more by the end goals than you are by specific tasks. And so how you get to the end is not really known until you get there. So you can't articulate the entire, process flow. So you have this notion of, runtime behavioral change for the system where the case worker can modify the process in real time. But I won't get into that. Let me just say that there are lots of applications in credit unions for applying a case management concept to a process. Any kind of negotiated document where you have a more of a collaborative session with lots of editing and changes and so forth. If you have, a customer onboarding, you're bringing on a new credit union customer, viewing that as a case allows you to take that outside in view and not treat it as a serial movement from one department to another. Loan origination, very, very important area for credit unions. That's where a lot of very solid loans are provided to long-term employees of companies. Revising that and using a case management construct is important. So you see this service request area. That's really where case is the biggest, but it's also important for doing investigations, like in the audit world or in handling incidents. But the most important area for credit unions is service requests. Now, where do you want to focus digital process automation, case management, BPM? You want to focus it at, where, if you look at the banking business, where there's the most ad hoc interactions where, you have require some structured, collaboration. As you move towards the bottom of this pyramid and you get to more structured, more production processes, that's more, about BPM or integration-centric BPM. Lease origination, credit card origination, import financing. They're more commoditized transactions. But where you're having to interact with customers and the process varies more. By the way, that's the area for the biggest opportunity for cross-selling, for providing advice, for really making that customer feel like a human being and not a transaction number or account number. So, look at the high-value transactions as the area to differentiate your credit union business. This is an example of onboarding, in a credit union context. You have the sort of sales engagement process. You do a lot of data gathering. You still have your KYC, rules that apply. You might be putting together a deal for some loan for asset-based lending. You're going to do some evaluation and underwriting and credit risk and so forth, and you're going to have a closing and fulfillment. So this kind of chevron is pretty typical. And this is where BPM, case management, and as we'll see in a minute, robotic process automation, which is a relatively newer category, really can help. Now, this is a view of some of the process options that enterprises now have, and it's a little confusing, the chart, but basically we're talking mostly, and what Newgen provides primarily is the lower right, which is digital process automation or DPA software. So you'll hear about low-code platforms, which is really just exposing a smaller set of application development features to allow people outside of technology management to be able to build applications. So so-called citizen developers. That's a newer movement. But BPM and dynamic case management has been around for a while and will continue to grow. But there also are fit-to-purpose solutions that you'll see in there are thousands of them you'll see in the credit union context, where you have a particular platform that's been built specifically for something a credit union does. Now, the value of that is that it's more fit to purpose, and you may be wowed by its closeness to fit for the particular business or function in the credit union. But it lacks some of the agility, the design surface that allows you to continuously improve the process, the business rules capability that is more English language and can be understood by the business. These are elements of agility that the BPM processes have that sometimes the fit-to-purpose solutions do not. So just be aware that you're making a trade-off there between domain-specific, and process agility. I also have out there to the left, because there's quite a bit of movement towards cloud solutions like Salesforce and ServiceNow and the domain-specific cloud platforms. So they have their own process capability. Excuse me. That's often very good for certain applications, but again, there's not the depth of process capability that you get in the lower right. Now, what's interesting about credit unions, often they have big outsourcing relationships with core system providers, and they'll be maybe that's provided as a managed service, which is pretty typical. Now, they'll do a good job in the core system elements, but when you get to process and process orchestration and building these kinds of capabilities, they're often, if they have a process capability, it'll do well to integrate elements of their platform. But if you're integrating with other elements or the customer, often they're not as strong. So in this context, you would look at, say, a Fiserv or someone like that as being part of that domain-specific cloud platform, but thinking that's more of a managed service than it is a true cloud platform. So you can't do a presentation today without mentioning robotic process automation, so I will just mention it. I think it's not as important a technology for credit unions because you need to find processes that are relatively simple, that usually involve data entry and swivel chairing between apps, and have a small number of decisions, a small number of apps, and less than 300 or 400 clicks. And you can build a bot that essentially does that human function. But you also need, once you found that simplicity, you also need a transaction volume that's high enough to secure the investment for the automation. If you find high transaction volume and simplicity, then it's a home run for RPA. Credit unions typically do not have, the kind of volume that, say, a retail bank would have. So you may not meet that criteria for RPA being effective in your shop. But just to understand what a lot of companies are talking about and very excited about, robotic process automation is a very hot area, and a lot of companies are finding really good value with it. And it's referred to as building a digital workforce. So you're building these bots that are essentially taking over a lot of the low-value human functions. So that's all I'll say about that in the interest of time. What we see as a progression is that for the combination of RPA and artificial intelligence, we're going to see that more augmenting humans, as we see on the left. Employees, is going to be employee focused. There's almost too much focus today on chatbots talking to customers. And I know most credit unions are still at the point of, a lot of human connection, which is great, with usual touch points of email and phone. But a lot of the financial services world is trying to build chatbots that interact directly for customer self-service, for customer retention issues, directly with customers. That's to the right here. Customer-directed chatbots replaces the humans. and interacts with customers. But all that's not there yet. The conversations are clumsy. They often misdirect. We're in sort of what I call the make fun of Alexa period, and that's kind of, says it all. And so my point is that there may be opportunity to combine RPA with some machine learning and to provide advice to your employees to make them smarter. And that's on the left. And there may be an opportunity to build bots that are digital workers to support employee activities and to do things on behalf of customers, but not talk to them. Bots don't talk to customers, chatbots do. But I don't think you're behind if you're not doing things directly with customers, which to me is going to take some time. Humans are really good at some things. We get blown away by machines that are so much better at computational analysis. They're so much better at pattern matching. They're so much better at things like navigation, and they already are way better than we are. But when you talk about sentiment understanding and understanding a conversation and human interaction, we're well ahead of any machine today, and I think we will be for a number of years. We had to evolve biologically to understand other humans. If we didn't, we couldn't tell whether they were friends or enemies. So if you didn't understand that, you were eliminated pretty quickly from the ability to procreate. So, don't worry so much about chatbots directly to customers, but think about chatbots supporting customers and RPA bots to help do a lot of the execution work. So it's important, even though you may outsource a lot of your technology, but to think about the automation capabilities that you have within the credit union. You have manual work today that you're doing. You have what we call assisted, which is the DPA, the BPM, and so forth, and partial, and you get up to text analytics and artificial intelligence. But the idea is that we've shifted the conversation from customer experience to digital disruption, and now we're talking about automation. So that's the current conversation. So in summary, in order to better serve customers and organizations, you got to understand that customer context. You have to break down those siloed operations and look to these DPA platforms, which you're going to hear about in a couple minutes, to really provide the next level of data visualization, management, analytics, and collaboration. So thank you very much.
Thank you, Craig. Ashish?
Yeah, thanks, Craig. Thanks, Rajan. Can you hear me well?
We can.
So thanks all for joining in. I think it was a great insight, and this is my fourth time that I'm speaking with Craig, so always a great learning experience. I think what I'm going to speak for the next couple of minutes is more in terms of our experience from the other side of the table. When I interact in my role as the head of banking and financial services with the financial services leaders, both in credit unions and banks, the word digital transformation is heard in almost all the boardrooms. All the credit unions and banks that we speak with, they have either this as a part of this year's budget, or this is a part of the journey that they have already taken, and it's getting into a phase of maturity. The interesting thing is that when we talk about automation, the definition of that automation completely changes from organization to organization, depending upon where they have reached in the process. So let me just give you a little bit overview about who we are and what we do. So Newgen is a global institution with operations in more than 61 countries. From a standpoint of our financial services footprint, we have more than 400 plus banking and financial services customers that we service across the globe. We have a pretty large banking center of excellence that keeps on institutionalizing this knowledge that we have gained and trying to create frameworks on the top of it, which can be used by global institutions. And these days, what we have seen in the last 3 years of journey, that credit unions are coming up the curve because they all are competing in the same marketplace. And there is a pressure from the larger banks, there's a pressure from the alternate lenders, fintech companies. And I think where we score as a community or as an ecosystem between credit unions and Newgen and analyst firms like Forrester is in terms of looking at it from a larger perspective, looking at it from the perspective of it's more about the community that we have, it's more about the relationships we have and the community that we serve. But at the same time, the overall shades of this community are changing, the mix of this community is changing. I was talking to a credit union leader a couple of days back, and what I understood was that. So our question was mainly in terms of the global surveys that we conduct across the globe in terms of credit unions and banking customers. One of the things that I heard in that meeting was that there's a huge pressure in terms of retaining our existing customers and gaining more customers. So because the market is the same and the customer population itself is not expanding at the rate at which the expansion of the credit union is required. So I think that was one of the issues that was being discussed, though I will come down to, in a bit, I'll come down to our survey findings, and some of them would be related to what you think about. As an institution, both from Gartner and Forrester perspective, we are there in the leaders, one of the only institutions globally which has been recognized in almost all the quadrants. And we are very pleased that in the digital process automation initiatives of Forrester, we are rated pretty high. And a lot of that stuff that we have on the digital process automation is what is applicable to the credit unions in today's context. In terms of the competitive pressures, in terms of the member experience, and in terms of the compliance pressures that would be coming in. Now, with all that said, the interesting thing is that the market share has to be expanded, profitability has to be increased, and all has to be done in a cost-optimized manner. Now, how do you do that? The age-old way of doing it through a manual process, having people who have been with the credit union for a long, long time, who have the knowledge institutionalized, but at the same time, people are going to change, processes are going to change, and compliances are going to change. And with all these changing, the most important thing is that your customers are itself changing. Now, with that said, I think digital process automation is a way in which you can combine technologies together to be competing with the larger banks as well as to be competing with the fintech companies. Some of the recent findings from our credit union and banking survey, some of them would be related to what you face in your day in the life. Inefficient collaboration between the front offices and the back offices. Branch transformation is already happening. Digital is coming in. Online channels are increasing. Omni-channel approach is coming in. And with that said, I think the readiness towards all these things is no more a matter of choice. It's something that is and has to be done, because if we are not going to do that, our competitors alongside the road, across the branch, they're already doing that. Broken processes, especially, and there's a very nice term that I heard a couple of years back, which was back office black holes. Those are the places, I mean, you can see that in your account opening processes, you can see that in your digital lending processes, wherein these are the black holes wherein work just stays over there. Nobody has got the visibility of the work which is lying over there. Nobody has got the accountability in terms of doing something on that work. But that work just stays over there. And when work stays over there, it leads to additional times, it leads to chaos, and it leads to the work not being done in an optimized manner. And at the end of the day, your member experience goes for a toss. At the same time, I guess important thing is in terms of what are those opportunities, what are those things. In the earlier presentation of Craig in the digital process automation slide, you would have seen that there are so many opportunities that are there, whether it is from transaction perspective or whether it is from operational perspective or the processes which are more customer centric. All across these process journey, I think there are opportunities to automate those processes and get them to a level where you are doing it rather than doing it manually, you're doing it in a purely automated manner. We'll take up a case note of how another credit union has done that recently and what kind of benefits that they have achieved out of it. Some of the things that are also available from a key trends perspective is that 88% of the respondents said that digital transformation is extremely and quite important. Now, a couple of years back, we used to hear that as something which is a 5-year initiative. Now, what we're hearing is that if it is not a part of your boardroom discussions, if it is not a part of your already taken up IT or transformation journey, I think you're missing the boat there. And some of the things that we also heard from a digital transformation perspective in terms of what are the barriers. So I think the biggest barrier, and Rajan also mentioned that at the beginning of the webinar, is in terms of how to do that. I mean, a lot of these people are sitting on the fence. They know that they have to do it. The idea is how to do it. I think, that's where organizations like Celero and Newgen come in, which actually take up these exercises as a process discovery exercise within your credit unions and banks, and try to understand where you are in the journey and trying to recommend to you in terms of what can be the next steps in the transformation journey. One of the things that always comes up in all our discussions with the leadership teams is in terms of, we do understand that in this digital process automation, why it is important, because your processes are complex. Every customer is unique. Every member has got a different experience that they expect from the credit union. Your processes are people intensive. Think about your lending processes, whether it be a low touch process where it is a small business lending, or it is a no touch process where it is an account opening, or it's a high touch process in case of a commercial lending process. Across these processes of no touch, low touch, or high touch processes, important thing is that these are people intensive processes, and people add to time adds to cost, and cost leads to non-optimized way of doing the same process. And at the end of the day, every single thing is related to the experience that you're delivering, because the new members that are coming up, the new generation which is coming up, they don't have the same kind of loyalty that would be there existing with your existing long-lasting members that you might have. And I think that's where it becomes important that you go onto the digital journey and trying to give them the same experience while maintaining the same relationships that have taken the credit union so far in the journey. Operations are certainly, document intensive, and these operations are, again, the manual paper adds to the overall inefficiencies in the process. And then, everything is rules driven. So why not automate those rules rather than depending upon somebody to execute that rule? One of the examples that we wanted to take was from a digital transformation journey of another credit union. I think the important thing was that while you adapt a methodology of business process management coupled with document management or content management, important thing is that it takes you on a journey. It takes you on a journey through which you can use the same framework throughout the processes in the credit union and the bank. So you might start with in this particular case, they started with small business loan origination because that was critical to their business and to the community that used to serve. Then they went on in the journey for online member account opening, and they went on to the journey for commercial loan origination, which were more complex loans. And then finally, they went on to the consumer loan origination. Interesting thing is that they could take on this journey because they had a framework in place. They had a business process management framework or a document process automation system in place. With that, they were not dependent on multiple systems through which they were working, but they could do it all on one single system in a unified framework. Another example in terms of why it becomes important is that, as I said, that branches are converting to digital. Digital is converting to omni-channel. And with that said, it is important that you deliver that experience, and customer doesn't worry about what's going on at the back end, because back end is, or the back office is where you can automate. But the front end customer and the branch managers or the relationship managers, they are the ones who need to experience that great member experience without worrying about what's happening at the back end. And all the components that we have, we conduct these workshops at various institutions, and we have a successful track of conducting a 2-day or a 3-day kind of a workshop wherein we come up, we do a process discovery, and then we do recommend in terms of what are our observations and how can the framework help you in terms of a better ROI. So the numbers on the return on investment, because that becomes a critical thing when it goes down to the CEO or the CFO's office. The important thing is that why you can't do that is because of the fear of unknown, and how do you evaluate it? How do you justify that? And that's where we come in with that ROI model, which helps you with a Newgen template. And if you could see, these are the registered numbers of ROI at every single stage of an example of a loan processing scenario, where those kind of percentage ROI achievements have been there with these institutions. And I guess that's a big selling point to your board in terms of how can we bring in that difference by showing them the value. Finally, what digital transformation leads to. Think about your day in the life where you're always struggling for information, always trying to find out where the information is and going beyond and behind IT in terms of getting something which is so important for your business decisions. Important thing is that the system has to give you those kind of reportings, which gives you a sales dashboard, a risk dashboard, an executive dashboard, which helps you in making more informed, intelligent, and faster decisions. I think that's what, a couple of things or insights that I had from our experiences of working with various credit unions, and we look forward to working with you all.
Well, thank you, Craig. Thank you, Ashish, for those wonderful insights. Quite a good insight from your experience. Thank you for that. At this stage, I would like to open up the discussion for questions. If there's any questions, at this stage, most of you would probably have been unmuted. So if there are any questions, you can throw that in there, or you can put it in the chat window. We can pick it and answer it now or later.
I believe Jordan had a question.
Jordan? Jordan, you are unmuted, so if you have a question, please feel free.
I have received his question through chat.
Hi, sorry. Oh, sorry about that, guys. Hello, can you hear me now?
You can.
Go ahead.
Okay, perfect. Sorry, Craig, I had a question for you. You talked a lot about, that digital transformation that a lot of enterprises are experiencing and going through. In your experience, what are some of the typical barriers you've seen, whether they're internal, like readiness and cultural change of the staff, or are there external ones like that risk of failure if you try it and fail? Is there any insights there you could share with us around some of those barriers or challenges?
Yeah, well, I mean, a lot of the, I guess after having been, in this area for a long time, the biggest barrier seems to be making changes to the legacy systems to accommodate the digital transformation. A lot of the business cases for what you really want to do, run into a brick wall when you start to look at, revamping that core banking platform, for example, moving it to more of a distributed microservices type architecture that you might need for the revised process. So there's some definite, technical issues which result in costs that, these organizations have a working process. The question is, how it takes vision, and it takes, a lot of extra work to break out of that and to do something different and to modernize and to rethink how you're doing business. And that's often an energy level that has to come from the top that isn't there. So there is this combination of technology infrastructure issues, and I think leadership and cultural issues at a lot of these organizations that just aren't rising to the level of energy they need to really look at their business in a different way. A lot of larger organizations will have innovation centers. They'll have leaders who will come in and just force change on their organization by, getting the senior people together to really, brainstorm about how to do things differently. And sometimes that energy is lacking. That's kind of in a nutshell what we're seeing.
Perfect. Any other questions?
I had a question for Rojan about how Celero can help in terms of assessing a credit union's readiness to start on the digital transformation path.
Yeah, we are already down that path with some credit unions. I think the point which Craig just made, and you heard that theme throughout this discussion today, where there's that hesitation. I don't think it's a bad hesitation. It's really good hesitation in terms of where do I go from here. So we had cases where we started with a definition of a strategy and roadmap exercise, but really what it ended up, in my experience, was cases where in one path where credit union said, well, I have this 2 or 3 processes or use cases. Really, I wanted to start automating and understand what process automation and digital transformation is really. But at the same time, I want to get some value to the member and also some internal efficiency. So we help credit unions to define that path. And in some cases, credit unions have gone back and said, well, really, I have to rethink about this because this is the way I've been doing it for 20 years. And if there's any question about why are you doing this, it's always been, yeah, we've been doing always like this, right? So they hired process re-engineers, and it's doing those little baby steps that when you bring the technology side of the equation at some point would really start getting them the return. So that's one path. The other path we have seen, which is more of an accelerated path, is some of the institutions who have done those basic thought process and really believes that their process is to an extent, very much in line with the industry standards and efficient and so on. So they are looking at solution accelerators. So working with Newgen, that was one of the attractions we had when we looked globally for a partner, was they bring in solution accelerators around commercial lending, small business loan, trade financing, and retail lending that are almost 70 to 80% ready to go. So you have a 20% flexibility, unlike a fintech, where you can sort of configure those processes to meet your needs, but you don't have to start from scratch because these processes are industry standard processes that you can leverage and start automating. So they are looking at the way to start in that side of the spectrum, by getting some of this, pre-configured solution accelerators. And on the flip side, they're also saying, well, now I can do a parallel initiative to automate some of my internal pain points, like, we touched on the invoicing side, or financial disbursement, or some of those processes that I can easily, automate. So there's this two-pronged approach we are seeing through our strategy and roadmap exercises that is helping credit unions to go from that starting trouble to, yes, I can do it kind of an attitude. I hope that answered your question.
Yeah. I have received one question, but the person hasn't specified to whom the question is for. So I'll suggest maybe both, all of us can try and answer it. The question is that what proves to be a better option in a longer run in the journey of digital transformation, BPM on cloud or in-house on-premise implementation of BPM?
I can take the first dig on that, and then Craig, certainly you and Rojan can answer. So I think we have seen this journey and this really depends upon your size, your maturity, what has been your experience. Last year, if you would have asked me this question, I would have said that, hey, you know what? People have a mixed opinion about going on cloud or going on-prem. I think now when we are in those meetings with credit unions and banking customers, I think cloud is a de facto standard. They really want to go ahead with a cloud-based option. However, there have been instances where we have worked with trade unions, we have implemented their processes, where there is a internal debate in terms of, have we done that before? Do you really want to do that? And for that case, we also offer some kind of a hybrid model where okay, try to experience it. How do you feel about that? You want to start with one part and then go to the next phase, say starting with on-prem and going to cloud, or starting with on cloud and going to on-prem. But I think more and more the choice is going towards cloud, because it's becoming a standard through which organizations want to automate their processes.
Craig, any thoughts on that? You can see Craig on a mute. So I'll take a stab at adding a few comments here while waiting for Craig. And certainly echo what the sentiment that Ashish shared. What we are seeing is both cases where it also depends on credit unions. If you're already in cloud, or your architecture is ready and that journey to cloud is much smooth, then by all means, I think that probably would be the best way to go. But to Ashish's point, if you are not quite cloud ready, if you have, for example, in the cases where you have distributed branches in remote locations, and if electronic signature component that's on like a heavy set of PDF documents, or it all depends on your solution. So if those factors are involved, maybe you're not fully cloud ready. Think about, I travel to remote parts of Canada where you don't even have a Wi-Fi connection. So cloud versus on-premises versus hybrid, it would be a very much case basis, depending on your readiness, depending on your location, distribution of your branches, what load you're looking through that solution, so and so. Sorry, Craig, any insight?
I was on mute. I apologize for that. I was speaking to myself, apparently. I think we're seeing at different parts of, again, organizational size is a big determinant of the direction for cloud, right? And we're seeing, particularly in the case management, which is a variant of BPM and part of DPA. We're seeing that really trending towards more managed service than cloud, in the sense that I'm happy to have a platform outsourced for me, but I also want a partner to build and host the application on that platform. So I want a managed services approach, which I think is consistent with what a lot of the credit union community does today. So I think that that's should be a very viable solution for credit unions, because they're treating as a managed service a lot of their core systems today. So when you look at the orchestration layer, why not have that be based in the cloud as well? Did that answer the question?
I think so, yes.
It was an online question. Any other question, Darshak, that you have fielded, or anybody else have any other questions?
No, Rajan, I'm not seeing anybody in the question queue anymore. So I believe that's our cue for ending the session.
Perfect. Thank you. Appreciate that. So if anyone is interested to know more about the platform, or how we, along with Newgen, can help you in your digital transformation and business process automation journey, please contact me directly. I'll share my contact information via email, or you can always contact your Celero account executive if you need more information. With that, I want to thank everyone, especially Craig and Ashish, providing your insights, and all the credit union staff and executives who joined this session. Thank you for being with us today. and we'll send you further information via email. Thank you.
Thank you. Thank you, everyone.